All right. Hello, everyone. Welcome to season 2 of the podcast. Excited to be picking it back up COVID style. Excited very today to have Marc-Antoine Caya, co-founder and CEO at goPeer. How's it going, Marc?
I'm good, thank you. Thanks for having me today.
Yeah, well, it's a pleasure to be able to connect with you, even though we're in different cities, and now we're able to bring this podcast across the country. To kick it off, how we'd like to start is that you tell us a bit about your company. So could you please, give us the story behind goPeer?
Yes, absolutely. Well, before I start, let me ask you a question, Nick. Do you know where banks get the money from when they issue loans?
Yeah, people, the consumers in general, yes.
Well, that's pretty much right. They essentially use customer deposits. So the money you have in your checking account, they'll use this and they'll lend it out at a higher interest rate than what they pay you, and that's how they make their profit, essentially.
That's a curveball for me. Generally, I ask the questions. I wasn't prepared really in the morning to answer
Yeah,
that.
I put you on the spot there. So essentially what we're doing at goPeer is we're changing that legacy banking model where instead of you depositing your cash to the bank and having the bank lend it out and make the difference in interest rate and keep the profits, we want to connect everyday ordinary Canadians like you and I directly one to another so that they can borrow and lend directly one from each other. So what we do at goPeer is that on one hand, we offer a platform where people can apply for a loan, and if they're approved, their loans get listed on a marketplace where everyday investors like you and I can browse and choose which loan they can invest in. You can invest in fractions of a loan.
And so is this, let's say, safe? Because if it's banks doing it, I guess they have a high level of diligence before giving out a loan. How can a fintech startup be able to do the same?
Yeah, well, we use very similar underwriting model as banks. So we look at banking transaction history, we use a credit file, the credit score, and we also pull other sources of information. Now so banks usually will only lend in the, call it prime plus credit sector. Our view is that as an investor lending to someone, there's a lot of people that are ready to take higher risk for higher reward. So we offer loans through a much broader spectrum of credit grades. And obviously the interest rate that we charge on those loans will vary according to their risk, so that as an investor, you are appropriately rewarded for the risk that you're taking.
Gotcha. And how did this start? How did you get the idea of launching such a platform?
I think it was a few years ago. I was looking, so personally, I used to be a banker. I used to work in investment banking. And I remember we were issuing this note for a client. It was a convertible debenture. And personally, I thought that was a great fit for my own personal investment portfolio. It was high yield, fixed income piece of debt. And then I realized that it's just impossible for like everyday retail investors like you and I to invest in most fixed income product. It does not trade on an exchange. So unless you have an institutional trading desk, really, those products are completely inaccessible to you. So I called my broker. I asked, what do you have? And the only thing they had to offer was Government of Canada bonds, which did not fit my investor profile. I was looking for something with maybe a little bit juicier returns. And I thought that was a problem that needed to be fixed for everyday retail investors. And that's how the idea for goPeer was originally born.
Okay. And then what did those early days look like? Let's maybe do it historically, like how it started off. Did you start alone or with a team, first of all?
The early days. So that was about 2 years ago, 3 years ago. It was just an idea. It was actually quite different. But I was looking, I had no idea that would turn out into a sort of peer-to-peer lending model. All I wanted to bring was new high yield fixed income opportunities, investment opportunities for everyday Canadians. And as I was looking various assets that could offer this type of investment, I realized there was a huge gap in the personal consumer lending space. So you have banks on one hand that offer very competitive rates on term loans, to a subset of the Canadians with prime plus grades and that have very stable income. And then if you don't qualify for bank loan, there's not much. You have like Fairstone, Easy Financial, and a bunch of like subprime online lenders. But the rates, the average rates at those guys starts at about 35%, 45% per year. And I was shocked. I was shocked that the rates were so high. And there's really not much in between. And this is where, like, wow, okay, we really need to fix that in Canada. It doesn't make any sense that you have a banking oligopoly. There are 5, 6 big banks that really dominate the market, and then there's no one. And because the cost of funding for most lenders is really high, they don't really have the choice but to charge high interest rate on their loan.
Well, and all the default rates as well, which I'm guessing are higher for.
Yeah, default rates, it really ranges. It goes, between 5 to 15%, depending on where you are in the risk rate. But what costs them a lot of money is that when you're a lender, you need to borrow money first before, and so that you can lend it out afterwards, right? So if you pay 10% of the money you borrow yourself as a lender, as a company, there's no way you can make loans at 10% or below that rate, or you'll be losing money. So those companies, they borrow at 10, 15%. Plus they have like a branch network to operate. They have labor-based processes, which drives their costs really high. And I thought, wow, like those models, they date from 100 years ago, right? That's something that we can change here in Canada, and actually the peer-to-peer lending model exists in the US, in the UK, in Europe, internationally. It's been around for over 15 years, and it's working very well. Why didn't we have this here in Canada?
So what were the reasons? I guess one of them is on the regulation side, that it can't be. Well, how did that go to be able to launch that and get regulatory approval? And where are you approved now in Canada?
Yeah, so there's many laws. It's actually pretty complicated, to be honest. I think you're right. Regulation was probably one of the primary barrier that prevented the model from coming here to Canada. There's a lot of regulation that we're subject to. There's like money laundering, terrorist financing, which sounds trivial, but when you actually need to put this in place, it's a pretty big burden. There's also securities law, which is probably one of the strictest one, where because we're offering investment to everyday Canadians and not just accredited investors, we need to comply with a ton of restrictions and obligations, and we need to make sure that the investments we offer on the platform are the right fit for the investors, for their investor profile, their risk profile, their financial objectives. So there's a pretty thorough analysis that needs to be done, not just on the borrower, but on the investor side as well. So yeah, I think those are the main regulations, and obviously there's consumer protection statutes in the various jurisdictions. goPeer, we've launched a few weeks ago, early in September, across Canada. So from coast to coast, we're available in all provinces on both the borrower side and the investor side.
Okay, cool. So yeah, and I want to get into like where you guys are at now, but we kind of skipped ahead already. So back to the beginning. We didn't even chat about like your team and how you formed, which I guess you had to, like, what did that look like? You started building the platform and then you went to get approval. And I'd also love to learn how you started getting your first customers, since it's a marketplace. How did you go about that? You often have the chicken and egg problem.
Yes.
You need people willing to borrow, but you also need people willing to invest. And yeah, could you tell us about that story?
Yeah, you're right. There's definitely a chicken and egg problem in launching a two-sided marketplace. It's actually quite challenging, to be honest, to get started on that front. But I think the team's been doing well so far. So how we got started on that front, I think your first question was about the team.
Yeah.
So I met my co-founder, when was it? Early 2019. I think it took me 3 months full time to find the right co-founder And at the time, it seemed like forever.
You don't have a technical background, right?
No, I don't. So I have a banking slash finance business background, and I needed a technical co-founder. So there's many people out there looking for technical co-founders, and it's pretty challenging to find the right one. I mean, there's not that many technical people out there looking to be a co-founder, and then you really need to find the good fit between the personalities, between the vision of the company, the mission. So that was probably one of the biggest milestones that I've achieved with goPeer, was to find Joseph, who's my co-founder now. He's the CTO of goPeer. Had the right background, we had similar vision, and there was a good fit. So so that was the first big start. Then we got onto building the platform, building the suitability piece, the suitability algorithm that was needed to get approval from a regulatory perspective. So that took us almost a year just to get that piece done. There was a lot of back and forth with the regulatory authority, just to make sure that we comply within the securities law framework that there is in Canada. And the thing is, the way securities law were made, fintechs did not exist at the time. It was never intended to accommodate any online businesses or any new business models. So it was quite challenging to fit the idea that we had of a modern, democratized, decentralized lending platform within a very rigid box that is securities law.
Well, and that's why they have the sandbox, as they call it, right, at the AMF or the OSC,
Yeah,
to be able to be in that nebulous zone where you're able to work closely with them.
yeah, definitely, and then they were being very helpful. Certainly, they had their part to play on that, and I'm really grateful that the team we worked at, they were really amazing. To be honest, I was a little bit skeptical at first, going to the Ontario Securities Commission, and it sounds like the police in a way, but it turned out the team we were working with were amazing, and they really helped us to bring this forward.
Gotcha. Okay, so Joseph comes on. You guys are two. You're knocking on the regulatory bodies' doors. What comes next? They give you the stamp and it launches, or what happens there? Are you just two on the team today?
Pardon me?
Are you just still two on the team today?
No, now we're 4 full time. So after that, once we got our approval, we went fundraising. So we did a quick friends and family / pre-seed round, angel round, I'd say. And then we hired one additional full stack developer to help build the platform. We wanted to automate all the processes, and we're still working on that. There's actually quite a lot. So we hired one full stack developer and a growth marketing manager. So we had identified that growth marketing, in particular online marketing, was not a strength that we had within our current team. So that was one of the first employees that we hired.
Okay, cool. And then, let's talk about the chicken and egg problem then. How did you guys actually start and get over that hump to be able to get your first customers?
Yeah, well, I think the fact that we've been, so that regulatory process took so long. It took like over a year, and we had a very basic website. I think the first website we had was just a landing page saying that, hey, that's goPeer, that's who we are, that's what we intend to do. If you're interested, just drop your name and email, and we'll keep you posted on our developments and our progress. So over the course of that year, we've accumulated over, I think it was 1,600 people that showed their interest, that followed us. We sent regular newsletter every month-ish, just keeping people posted. So I think because that process was so long, we ended up with having a good basin of people that were following us. And when we opened up the early access, most of them opened up an investor account or took out a loan. We're actually surprised on the borrower side. A lot of people who were following us for a loan through the year actually ended up applying for the loan when we opened up early access, and similar for the investor side.
Okay. Okay, neat. So finally, after a year of just generating a mailing list, that you were able to have enough people to kickstart it. It's great.
Yeah, definitely. And then when we opened up early access just for people on the wait list, and that the goal was to solve this chicken and egg problem. To have no one wants to open up an investor account if there's no loan on the marketplace. No one wants to apply for a loan if no one's there to fund it.
Right.
So by having this pool of people that's been following us for a little while, it helped us to kickstart the platform and break that chicken and egg problem.
Okay,
So
cool.
I can't tell you whether the chicken or the egg came first.
They came at the same time.
Yeah.
And then launch. How did that go? What was the experience like in actually, making it public and live?
Yeah, that was epic, to be honest. After working on the platform for so long, it was amazing to be able to tell the public and open up, and we got a little bit of coverage in the press, investment executive, and other finance media. So that was really good. We've got a lot of finance professional coming in on the platform, asking us questions, opening up account, and giving us feedback. And there's a lot of people are more grateful than I thought, especially on the borrower side. We have a lot of like entrepreneurs, newcomers, or people like Uber drivers that really have a hard time qualifying for bank financing. And their options, they're currently at like Fairstone or Easy Financial, paying 40% interest rate, which is ludicrous. So it's amazing that we can help them have refinance those high cost credit, and have more money in their pocket at the end of the month. And people, we have an impact in their livelihood, which is beyond what I was expecting.
Cool. So we chatted a lot about goPeer. I'd like to know more about you as the co-founder and entrepreneur at the heart of this. Is this your first startup?
Yeah, this is my first startup.
And how did you, just overall, how do you find, I guess, entrepreneurship and launching a tech startup? What's that experience like for you?
Oh, nothing like I would have imagined. I think it's pretty good. To be honest, I really enjoy it, but it's a lot of work. I knew it was going to be a lot of work, but it's a lot more than I expected. Just running the operation, I also have the chief compliance officer hat. There's a lot of reporting we need to do as part of the regulatory framework. So it never really stops. And I'm the only one on the team that speaks French. So all the French side, all our Quebec clients that wish to be served in French, everything goes to me. So honestly, I spend like 8 a.m. to 6 p.m. Mostly just dealing with the day-to-day operations and compliance, and then I can start to do more like founder work after that. But it's pretty amazing.
What have been some of your biggest, I guess, challenges that you've had to overcome as a founder that maybe you didn't expect would be challenges? Maybe it seemed trivial, but none. You just thrown the game.
Yeah, no, I'm thinking. I mean, we have challenges, hundreds a day. What's the biggest one? It's hard to say. That I didn't expect. I don't know.
Or some challenges in general that you've experienced that I don't know.
Well, at the very beginning, when I just started, when I dropped my full-time job to get started on goPeer, at the time when I was alone, I think finding a co-founder was a huge challenge. At the time, it took me 3 months full-time doing almost nothing else. So because you get to meet a lot of people, but you really need to have the right fit. And I'm quite pleased that I took this time, because you spend so much time with your co-founder, and you know, it's your business. You're highly emotionally involved with everything that you do for the company. So if there's not a good fit, I think it would be the end of a company.
Right. Yeah, no, that makes sense. And then maybe on the flip side, what has been some of your best moments? I know you said launch, but what, or rather before that, how was it then actually leaving a full-time job? That's often a very big break for a lot of people.
Yeah.
It's a big leap of faith. What made you do that leap and not want to build it while still keeping a job to have some revenue? How did that play out?
I recommend people to keep their job, to be honest. It took longer than I expected, but the thing is, the job that so I was working in investment banking, which is a highly demanding job in terms of hours, with 80 to 100-hour week being quite common. So there was no way that I could deliver high quality at my job as a banker while working on goPeer, building goPeer. I either had to quit my job or to start, being bad, quote unquote, being bad at my job and doing the strict minimum, which is not something I wanted to do.
Okay, so it was just like, let's see. And did you have a contingency plan? Did you give yourself a deadline or a roadmap? If this does not work,
yeah, I gave myself 2 years. So we launched goPeer within that 2-year period, which is amazing.
and now looking forward, what's your roadmap looking like now that you're live, that you've launched? What are you aspiring to? And yeah, what you hope the next year, so going year 2 to year 3, is going to be?
Yeah, there's so much that we want to do. From a product perspective, we really want to focus on features that will help. We want to focus on the borrower side and helping people understand like financial literacy programs and features. A lot of people don't understand their credit score. They don't really understand almost the basics of personal finance. So that's something we really want to help out people. So we're planning some features that leverages some new technology that the team is working on. And obviously, there's a lot of improvements that we intend to do on the platform itself. From a team perspective, we obviously want to grow. We're currently hiring, by the way. If anyone's interested, please reach out.
What are you hiring for?
We're currently hiring for an operations analyst, a dealing representative, ideally bilingual dealing representative, and a full stack developer, or either front end or back end.
Perfect. Well, we could share the word. We have a job board at FinTech Gains, so we could try to help you out.
Definitely. Thank you.
Okay, cool. So it's growth for the next year. I know you've been doing a lot of accelerators. How has that helped or shifted your experience with goPeer?
Yeah, those are great. To be honest, as a first-time founder, I highly recommend applying for accelerator or incubator programs. Some are better than others. We did for goPeer so far. We were in part of Launch U at York University, which is an amazing program. Great mentors. I think that's one of the thing that I think brings the most value, or brought the most value to me, was access to a network of mentors that are serial entrepreneurs that are in the fintech space, that have been mentoring or have been launching and exiting similar businesses over the last decade. So that's really, really helpful. And also access to a network of other founders that are at the same situation as you. It really helps we all share the same problems. So it really helps to have a group of people they can talk about and learn from. We also did Startup Boost, which was amazing, which is ran by a group of VC here in Toronto. And it's sort of like a pre-accelerator program. So that's the first one we did. And we also are in a part of Venture Lab out of Markham, which is, again, similar. It gives us access to a network of experienced individuals that can really help us grow and build a company.
You should check out Ascension by FinTech Gains.
I've heard about this one.
I hear it's good. I hear it does bring some value. Okay, neat. And maybe to wrap up in the final part, I'd like to and we spoke about a bit and your challenges and your experience launching. And what's great is you're quite early, right? You just launched 2 weeks ago, but you've still been working on it for 2 years. For people who are just starting it in the 0 to 6 months range of where you were at, any lessons learned that you could share as a first-time founder? Anything that now you know, or that lessons you've learned actually by speaking, with the other entrepreneurs from your accelerator programs that that you could share with the audience?
Yeah, just do it. I think that's
I think that's the Nike slogan.
Yeah. Sure. Oh shoot. Yeah, you're right. I'll have to tweak it. No, but seriously, jump in and do it. There's so many people that have great ideas. They have they have great potential, but they're afraid, or at least some people. So I think just do it. I know that's a Nike slogan, but like jump in, do it. Don't be afraid. Like say, I think that would be the number one recommendation, I would say. What else? Yeah, don't be afraid. Like there's so many things that you can do, that one can do, if they're not scared of, or they're not afraid of the consequences or the impact that it could have.
And if you were to maybe scrutinize yourself in the early days and look back at things that you could have done better, what would have that been? Anything that you could have improved on, or if you were to launch another startup in the future, that you might do differently?
Oh, so much. So many things. I think one of them would have been to get my job.
Oh yeah? You think you would have been able to balance both?
Yeah, it would have been hard. Maybe I could have found another job with a better work-life balance in between. Yeah. Oh, I think one thing that I didn't really grasp at the very beginning was the importance of testing like super quickly. I think I came more from an enterprise kind of background, or big corporate background, where everything needs to be like very good, very detailed, very thorough, which doesn't really suit itself well to startups. So I think that's what the approach I had at the beginning, and I think I could have grown faster if I just, don't spend too much time on the detail. Just do it, test it. Does it work? Does it not work? If it not works, after a week, after 2 weeks, 3 weeks, dump it, think about something else, try again, rinse and repeat, instead of building something that is like enterprise grade. If that makes sense.
Yeah. No, 100%. 100%. Okay, so move quicker, be more agile and lean.
Yeah,
and
exactly.
Also have some sort of revenue, some cash flow on the side, just to be able to sustain yourself. And what would that have done, having a job on the side for you? Was it because you had to just live on scraps, or
less personal financial stress?
Right. Okay, so you just would have been more comfortable, and yeah. Well, at the same time, stress is also a great tool to be able to push you to move forward and get over road bumps. So who knows? Maybe if you did still have.
You know what? That's very true. When you have everything, when that's your full-time job, you don't have the choice but to push this forward as quickly as possible.
You're building the airplane midair as you're jumping off the cliff. So that's the often startup analogy.
Yeah.
But cool, Mark. Well, thank you so much for taking the time to share your story and talk about goPeer. Really appreciate it. And well, I hope it's some useful insights for those listening. And I wish you best of luck in your continuation. It's really the early days, so I hope you could follow up maybe in a year's time and see where you're at. And it's crazy times launching, well, post-COVID, but not really. For those listening, for a historic perspective, we're kind of between a first and potentially a second wave. So it's a bit wild launching a startup in 2020. I see it on your face. It's it must be a gnarly experience, but keep it up, and look forward to following up with you in the near future.
Terrific. Thank you, Nick, for having me this morning. It was a pleasure to have the chance to chat with you.
All right. Cheers. Have a good one.
Thank you. Bye-bye.